Hey, this is Matt from InvestiQuant. Today is Monday, November 30th, 2020. And this morning we saw the markets gap down a little bit and then press lower throughout the morning session. We had a decent bounce here a little bit before 11 a.m. Eastern time, and we've since kind of just been drifting higher, but trading below the open still. So we still got a red candlestick forming. All of the markets currently down on the session. But what I want to do this afternoon is take a look at a last trading day of the month study based upon entering the market near the end of the session. And I'm going to be pretty simple about this one. I just want to look at the last trading day of the month when you gap down and are above a 200-day simple moving average. So a very simple pattern here. And I'll show you the results here in just a moment. We'll be looking at all four instruments as I set this up. And the entry time is going to be at 3:30 p.m. Eastern time. I often do, 2:30, 3 o'clock. This one tends to be a little bit better later in the day. So I'm going to do 3:30. If you've got access to the platform, I would encourage you to look at these next two ones down a little bit closer to the end of the day because they are strong. I'm going to go with 3:30 because that'll give you a little bit more time to see this and to dig into it on your own. The opening filter I'm going to use is gap down. And then I'm going to go into the indicator section and say that we are above a 200-day simple moving average. I'm just going to use the 200 because I do want to keep as many samples as possible. And with the calendar filter that I'll be adding here of the last trading day of the month, we're only going to have one day a month that this can happen, and I've got a gap down with it. So because I've got those two things in here already, I don't want to get too specific, but I've looked at this already, and adding the 10-day moving average like I normally would doesn't make a big difference. So I'm going to go ahead and leave it out, and we'll take a look at this pattern here of gapping down when above the 200-day moving average on the last trading day of the month. So let me hit view results. All right, and here we go. So these are the results of going long at 3:30 p.m. Eastern time, exiting at the close, which is 4:15 p.m. Eastern time. When it's the last trading day of the month and you gap down on the session, this is taking place above a 200-day simple moving average. And historically, we've got 78 samples in the S&P, we've got 72 in the NASDAQ, 78 in the Dow, and 65 in the Russell. And if we take a look at the win rates on these, you'll notice most of them here fairly neutral looking. You've got S&P, 55% of these closing higher than that 3:30 p.m. Eastern time price. The NASDAQ exactly 50-50, the Dow 56%, and the Russell weak at 32%. But what stood out to me as I was looking at this earlier is it's obvious just from looking at the equity curve here is it's changed a bit over the years. So historically, if you look at this equity curve, you can see it is slowly working lower. But that stopped. That stopped somewhere here around 2016, and it started moving higher and getting stronger here in recent years. And if you look below in our results table, if you look at like the last 5 years or so, which is about where this equity curve starts moving higher, you'll notice the win rates on these are quite strong. So last 5 years here in the S&P, we've got 23 samples there. 70% of those have closed above that 3:30 p.m. Eastern time price. So long term, you're looking at 55%. But if you look at a shorter term look back period, just more recent market conditions, almost 70% of those have closed above the open of that 3:30 p.m. Eastern time bar. So they've closed above the 3:30 price. If we go to the NASDAQ, do the same thing. Just look at the past handful of years. You can see it's been quite a bit stronger as well. The NASDAQ, this scenario has happened 20 times in the past 5 years. That's coming in at 65% of those closing above the 330 price. The Dow, last 5 years, 21 samples, 81% of those closing above that 330 price. And then the Russell, which is the weakest overall, last 5 years, 60% on the 15 samples that it has. So all four of them have been favored here in recent years, but long term they have not had strong edges. It's just been something that's taken place here recently. And like I said earlier, if you have access to the platform, I do encourage you to go in and change up The time frame, look closer to the end of the day. There's some strong results there at the end of the day. Some of them quite a bit stronger than what I'm showing you here. So that's something you might want to dig into on your own as we approach the close. But hopefully you found this helpful. Good luck, and we will see you next time.